All right, guys, let's get into something crucial for finding an edge, identifying real absorption in the market. I want to walk you through a suite of three specialized absorption indicators we've put together for Sierra Chart. These are designed specifically to pinpoint high probability reaction zones, and they do it by looking directly at the genuine order flow activity. Okay, first up, we've got the absorption zones. Now, these dynamically figure out where significant volume delta imbalances line up with specific price action. What we're really pinpointing here is where aggressive buying or selling runs into a wall of passive limit orders. The core strategy here is simple but powerful. You look for price to come back and retest these zones for confirmation. It's straightforward, but it's incredibly effective. And of course, these absorption zones come with parameters you can adjust. You can fine-tune the sensitivity depending on what you're trading or how volatile things are. We include detailed guides with suggested settings for the main markets, NQ, ES, crude, and others. One important thing to note, the indicators need footprint data to do their calculations accurately. But the good news is, you can easily overlay the zones and signals onto any chart you prefer, candlesticks, range, Renko, whatever, on any time frame. We show you exactly how to set that up in the guides. We also include an absorption bar detector. Actually, there are different ways to spot absorption in the order flow. This tool gives you that confirmation on a bar-by-bar basis, highlighting candles that show strong absorption characteristics. Think of it as another layer of confluence. It helps confirm potential entries that the main zones might be signaling, or it can validate other things you're seeing in your analysis. It's a solid, reliable confirmation signal. Next, let's talk about the trapped trader zones. This is arguably one of our most sophisticated order flow tools we've developed. What we're doing here is algorithmically detecting areas where significant clusters of traders likely initiated positions only to find themselves quickly offside. Similarly, the trapped trader zones offer parameter adjustments. This allows you to control the sensitivity and, consequently, the frequency of zone generation. Again, comprehensive guides are provided to help you dial in the settings that best suit your trading style and market focus. Our strategy with this indicator is pretty simple and effective. We look for reactions on the retests. What makes these zones powerful is their tendency to act as immediate inflection points. Now, here's a huge benefit for both of these zone indicators. They bring real clarity to your risk management. Just place your stop just above or below the zones. And here's the key thing. If price decisively breaks through one of these zones and starts accepting beyond it, the setup is invalidated. It forces discipline. If the zone breaks, you take the planned hit, step back, and reassess. Now, I know what some of you might be thinking. Is this just going to be a highlight reel of perfect zones? Not a chance. Let's check again Friday quickly. About 30 minutes after the open, you see this trapped trader zone pop up around 19,866. You wait for retest and pull the trigger. That was a great trade. You see the next zone? Same story, retest, and go. Actually, if you follow the strategy for the all-day, there is only one loss here. Additionally, you'll see zones with dashed borders. The indicator automatically modifies their appearance after they've been retested. This visually confirms the zone has been interacted with, helping you differentiate fresh zones from previously tested ones. Okay, let's briefly touch on Thursday's session. A few minutes after the open, we saw a zone form here. Notice there wasn't an immediate retest. Now, a very aggressive trader might consider an entry there, but personally, I'd prefer clearer confirmation, so I likely would have passed on that initial signal. Shortly after, the next setup presented a potential scalp opportunity, good for about 25 points, which is certainly not insignificant. The subsequent setup offered similar scalp potential, though depending on precise entry and management, that might have resulted closer to break-even for some approaches. Later on, this short zone appeared. However, see the bullish zone forming just underneath it? That conflicting signal is key. For me, that's a reason to be cautious and avoid the short. And as you can see, that bullish zone ultimately provided a solid long entry. Look, I'm not going to analyze every single signal that printed here. You can observe the chart for yourselves and see how these zones consistently highlighted potential reaction areas. So that concludes today's overview. The charts and chart book demonstrated are provided with our absorption pack, which includes a lifetime license, unlimited support, and free updates. See you next time.